My mother slid a piece of paper across the kitchen table on a Sunday morning while my father stood at the stove pretending to read the back of a cereal box. The paper had a number at the bottom, $230,400. I stared at it. Then I looked up at her. "That's what you owe us," she said. 14 years of rent. We kept track. I was 29 years old. I had lived in their house from age 15 to age 22, paid $600 a month every single month from my first real paycheck, never missed once, never asked for a receipt. My father set down the cereal box and said, without turning around, "We sacrificed everything for you. This is the least you can do." 3 weeks later, I was sitting across from a forensic accountant named David Stein in a glass-walled office on the 4th floor of a building in downtown Raleigh. He put on his reading glasses, looked at the spreadsheet I'd built from 7 years of bank records, and said 9 words that made my hands stop shaking. "They don't have a case. You might have one." What happened after that didn't just end the debt they invented. It uncovered a second account, a paid-off house, a life insurance policy in my name they'd been collecting on for 11 years, and a brother who knew everything and had stayed quiet since I was 18. Before I take you back to the beginning, please take a moment to like and subscribe, but only if this story genuinely stays with you. Drop your city and the time in the comments right now. I always love seeing where you're watching from. My name is Claire Booker. I'm 31 years old. I'm a licensed CPA in Raleigh, North Carolina, which, as you'll see, is either the most ironic thing about this story or the most inevitable. This is the story of how my parents spent 14 years treating me like a tenant, a ledger entry, and a financial instrument, and what happened the morning a spreadsheet finally told the truth they'd been hiding. Let me take you back to Garner, North Carolina. Population 31,000, split between the kind of people who've lived there since their grandparents built the first houses, and the kind who moved out from Raleigh when the rent got too high. My family was neither. We were somewhere in the middle, the Bookers of Elm Creek Drive, a 4-bedroom colonial with vinyl siding, a 2-car garage, and a mailbox my father spray-painted every spring because he refused to replace it. My father, Dennis Booker, worked in logistics for a regional trucking company for 26 years. My mother, Patricia, ran the front office at a dental practice on Tryon Road. My older brother Marcus was 4 years ahead of me, first in his class, first to leave, first to build a life they held up at every dinner as the standard I was failing to meet. On paper, we were fine. We owned our house, no mortgage. My grandfather had left the property to my father in 1997, clean title, no debt. I didn't know this until I was 27. The house on Elm Creek Drive, the one I paid $600 a month to live in from the time I was 21, had been paid off for 27 years before I ever wrote my first check. But I'm getting ahead of myself. Let me tell you what growing up in that house actually looked like. Marcus got the corner bedroom. I got the one beside the water heater. Marcus's activities, baseball, debate team, SAT prep, were line items my parents discussed seriously at the kitchen table, like investments. My activities, I swam competitively, made honors every semester, won a regional writing award in 8th grade, were acknowledged the way you acknowledge weather. Nice enough, but not the point. When Marcus got into NC State on a partial scholarship, my parents threw a cookout with the neighbors and a banner over the garage. When I got into UNC Charlotte on a full academic scholarship 2 years later, my father said, "Make sure you register for classes before the good sections fill up." That was the celebration. I did not hold this against Marcus. He had no more control over how our parents ranked us than I did. He was 4 years older and gone by the time things got bad, and I want to be fair about that. He didn't know everything, but he knew some things, and he stayed quiet about them. That part I'm still working through. The arrangement started the summer I turned 21. I'd graduated in 3 years, double majored in accounting and finance, finished with honors, landed a junior staff accountant position at a mid-sized firm in downtown Raleigh. The plan was to find an apartment, move out, start my actual life. Raleigh rentals in 2014 were not cheap, and I was making $38,000 a year. Possible, but tight. My mother called me on a Tuesday in June. She had an offer. "Your father and I have been talking," she said, "and we think it makes more sense for you to stay home for a while. Save money. Get established. You can contribute $600 a month, which is less than any apartment in this market, and in a year or two, you'll have enough to really get started." $600. In 2014, that was roughly what a one-bedroom in a mediocre part of town cost. Not cheaper than renting. Just identical to renting, but with my parents' rules attached. I said yes. I want to be honest about that. I said yes because I was 21 and tired, and the idea of a year to build a cushion felt like the smart, responsible thing to do. I also said yes because my mother had used a tone I recognized from childhood, the calm, patient voice she used when the decision had already been made and the conversation was a formality. I moved my boxes back into the water heater bedroom. I set up autopay for $600 to my parents' joint account. I reported to work at 7:45 every morning, came home at 6:30, ate dinner with my parents 3 nights a week, and counted the months. 1 year became 2. 2 became 3. The reasons accumulated the way reasons do when you're not paying close attention. My father's back surgery in 2015, my mother's reduction in hours at the dental practice, the roof that needed replacing, the car that needed replacing. Every time I raised the idea of moving out, there was a new reason why the timing was wrong. And underneath each reason was the same unspoken math. Your $600 a month is not optional. By year 4, I had stopped thinking of it as temporary. I had started thinking of it as a trap. Here is what $600 a month looks like over 7 years. $50,400. That number in itself is uncomfortable, but it is not $230,400. To get to $230,400, you have to start counting from the year I was 15, the year my parents decided, according to the document my mother slid across the table, that I had become a financial burden on the household. I was 15. I was a sophomore in high school. I was not employed. They had built a spreadsheet. I saw it later. Patricia had titled the tab, in her careful font, "Claire Balance Sheet." It went back to 2001. It included line items for food, utilities, room occupancy, school supplies, athletic fees, and something listed simply as parental time at $8 an hour, 40 hours a month from age 15 through 22. Parental time, 40 hours a month, $8 an hour. They had charged me for the hours they spent being my parents. I sat at that kitchen table on that Sunday morning in November, and I did not cry. I did not raise my voice. I looked at that spreadsheet the way I had been trained professionally, technically, to look at numbers. And I thought, something is wrong with this document. Not morally wrong, technically wrong. And I am going to find it. I took a photo of every page before I left the table. My mother didn't notice. My father was still looking at his cereal box. I drove back to Raleigh. I had finally moved out at 22 after 7 years when a coworker was looking for someone to split a 2-bedroom on Wake Forest Road, and I sat at my own kitchen table, poured a glass of water, and opened my laptop. I had kept records, not because I expected this moment, because I was an accountant, and keeping records was the only thing I knew how to do when everything else felt out of control. I had 7 years of bank statements, every transfer to my parents' joint account, every month from June 2014 through May 2021, $600 times 84 months, $50,400. Paid. Documented. Every single one. I also had something else. 3 years earlier, I'd been helping my father fill out a FAFSA-adjacent form for a younger cousin's college scholarship application. My father had handed me a manila folder of financial documents and said, "Find the house number." I was looking for the assessed property value. Instead, I found something else, a property record printout from the Wake County Register of Deeds, dated 1997. Transfer of title, no consideration. Paid in full. No mortgage recorded. I had put it back. I hadn't known, at 26, what to do with it, but I had photographed it, the way I photographed everything. Now I knew what to do with it. David Stein ran a one-man forensic accounting practice out of a fourth-floor office on Fayetteville Street. He'd been referred to me by a colleague who used him for litigation support. He was 58, wore half-rim reading glasses on a beaded chain, drank black coffee from a mug that said, "World's Most Skeptical CPA," which I respected, and had a reputation for finding the number behind the number. I spread everything on his conference table. 7 years of bank statements. The property record from 1997. My parents' Claire balance sheet. 3 years of their joint tax returns I had found in the manila folder, and, yes, also photographed, a copy of my grandfather's will, which I had requested from the Wake County Clerk of Court for $12 and received in the mail 8 days later. David put on his glasses and went quiet for 20 minutes. When he looked up, he said, "How much do you know about life insurance?" I stared at him. "There's a policy here." He turned a tax document toward me and pointed to a line on Schedule D, dividend income, 14 years running, from a whole life policy. Beneficiary owned, which means whoever owns the policy is collecting dividends on the cash value. He paused. "The insured is listed as you." The room went very still. "They took out a whole life policy in your name," David said carefully, "and they appear to be the policy owners, which means they are collecting dividends on the accumulated cash value of a life insurance policy on your life, without your knowledge, for at least 11 years. I looked at the line on the tax return. Small number, recurring, every year from 2009 forward. 2009, I was 15. Let me tell you what a whole life policy on a minor means. It means a parent takes out an insurance policy when the child is young, low premiums because of the age, and the cash value builds over time. The policy owner, not the insured, collects the dividends. The insured, me, has no access to the account, no knowledge of its existence, no ability to direct or withdraw anything. The policy owner, my parents, had been collecting dividend income from a financial instrument built on my life for 11 years. I did not cry in David Stein's office. I have cried exactly twice in professional settings in my adult life, and I was saving them for something worth it. I asked David, "What are we looking at total?" He turned to his computer, spent 3 minutes running figures, and then turned the monitor toward me. 11 years of dividends. $18,400, approximate. Current cash surrender value of the policy, $41,200. 7 years of legitimate rent payments made to parents on a mortgage-free property, $50,400. Value of rent paid above fair market rate for the property and period, $14,700. The house, a paid-off 4-bedroom colonial in Garner, should have been priced at $425 a month for a single room with shared utilities, not $600. He did not include the parental time charges because he could not, in good conscience, put them on a legal document. The $230,000 they're claiming, he said, is not supportable. It is built on unlawful retroactive charges, estimated expenses with no receipts, and categories that have no legal basis between a parent and a minor child living in the family home. He took off his glasses. The actual question is what you want to do about the policy and the overpayment. I asked him who I needed to call. His name was Thomas Abernethy. He ran a small civil practice in Cary, had been doing family asset litigation for 22 years, and had the particular energy of a man who had heard every version of this story and was neither surprised nor bored by any of them. He reviewed David's report in 4 days and called me on a Thursday morning. "You have 3 claims," he said. 1. Unjust enrichment on the rent overpayment. 2. Unauthorized use of your identity and insurable interest for the life policy. 3. If they pursue the $230,000 claim formally, we counter, and they will not enjoy the discovery process. He paused. "Is there anything else in that house I should know about?" I thought about it. Then I said, "My grandfathers will left the house to my father, and to my father's children equally." Silence on the line. "I'm sorry," Thomas said. "Say that again." I read him the exact language from the will. I had the photocopy in front of me. My grandfather, Walter Booker, who had died in 1997 when I was 3 years old, had left the property at Elm Creek Drive to his son Dennis and to Dennis's children in equal shares, Marcus and me. The house had never belonged only to my parents. 1/3 of it had always been mine. I want to pause here because I know what you're thinking, and you're right. This is the moment everything changed. Not the life insurance policy, not the rent overpayment, the will. Because the will meant that for 27 years, my parents had been living in a house they did not fully own, collecting rent from a co-owner who didn't know she was one, and threatening that co-owner with a fabricated debt to keep her in line. Thomas filed a quiet title action in Wake County Superior Court 6 weeks later. That is a legal procedure to establish who actually owns a piece of real property. It required notifying all parties with a potential interest in the property. It required, in other words, that my parents be served with court documents informing them that their daughter was claiming a 1/3 ownership interest in the house on Elm Creek Drive. I was not in the room when they were served. I heard about it from my Aunt Vera, my father's younger sister, who called me 3 days later with a voice I'd never heard from her before, like she'd been carrying something for years and someone had finally opened the door. "Your father called me," she said. Claire, I need to tell you something." She paused. "I've known about the will since 1997. Your grandfather told me what it said before he signed it. I always assumed you knew." I told her I hadn't known. A long pause. "I'm sorry," she said. "I should have said something a long time ago. Then, there's something else." Another pause, longer. "When your father showed me the Claire balance sheet, he showed it to me 2 years ago, asked if I thought it was reasonable. I told him it wasn't. He said he'd handle it his way." She stopped. "I should have called you then." I have thought about Vera a lot since that call. She is not the villain of this story. She is something more complicated. A person who knew the furniture was wrong, but didn't want to rearrange it. I have more grace for her now than I did that first week. But I want to be honest, grace takes time. It doesn't arrive on the same day as the information. Now, let me ask you something directly. And I want you to stop and think about this before you answer in the comments. If you found out your parents had been collecting money from a financial account built on your identity for 11 years, would you have pursued it legally, or would you have walked away to preserve whatever was left of the relationship? There is no right answer, but I want to know yours. Tell me below. Marcus called me the night before the first court date. I had not spoken to him since I'd filed. He had been served as a co-owner under the will. The quiet title action required it. And for 6 weeks, I'd heard nothing from him. When his name appeared on my phone on a Tuesday evening, I looked at it for 4 full rings before I picked up. "I knew about the will," he said. No greeting. Just that. "I know," I said. "I found out when I was 18. Dad sat me down, told me about Grandpa's will, told me the house was technically split 3 ways, but that he and Mom were going to manage it, and it wasn't something I needed to worry about. A pause. He said the same applied to you when you got old enough. He never told me. No. Another pause. Claire, I didn't think it was my place. I have spent a lot of time with that sentence. I didn't think it was my place. I understand it. I was 22 when Marcus found out. He was a 26-year-old man in a family where the rules of loyalty were written in invisible ink. I'm not sure what I would have done with information like that at 26 in that family under those conditions, but I needed to say something true to him. So I said, it was your place, because she was your sister. He didn't say anything for a moment. I know, he said. Are you going to contest the claim? A long pause. No, he said. And I'll tell you something else. I'll sign whatever the attorney needs. If my share is part of what makes this right, it's yours. I did not expect that. I want to be fair and say, I did not expect it, and it mattered. The case did not go to trial. My parents hired an attorney, a man named Gerald Fitch, who specialized in estate disputes, and had the look of someone perpetually disappointed by his clients. Thomas told me later that Fitch had apparently spent the first meeting explaining to my parents that the Claire balance sheet was not a legal instrument, that retroactive charges on a minor child living in the family home were not enforceable, and that the quiet title action had a strong factual basis given the clear language of the will. My parents responded by counterclaiming that my grandfather's will had always been intended to leave the property to Dennis alone, and that the children language was a drafting error. I had my grandfather's attorney's original notes. Thomas had subpoenaed them. The notes were explicit. Walter Booker had wanted all 3 grandchildren, Marcus, me, and a cousin who had predeceased him, to have an equal share of the family home. It was not a drafting error. It was a choice my grandfather made in 1997 that my father had spent 27 years quietly overriding. 6 months after Thomas filed, a settlement conference was convened. I am not able to share every term, but here is what I can tell you. The life insurance policy was transferred to my sole ownership. Current cash value, $41,200. It is now mine. My 1/3 interest in the property on Elm Creek Drive was acknowledged. The house was appraised at $387,000. My share, $129,000. My parents were given 18 months to refinance and buy out my interest or list the property for sale. The $230,400 debt claim was withdrawn, formally in writing in the settlement agreement. It does not exist. It never existed. The rent overpayment of $14,700, 7 years of above-market rate payments on a mortgage-free property, was folded into the property settlement. My parents did not pay my legal fees. I paid them myself, $8,400, which I considered the most educational money I have ever spent. I want to tell you about the morning after the settlement was signed. I drove to the office on Fayetteville Street and sat across from David Stein, who had a fresh pot of coffee and looked the way people look when a case has reached its logical conclusion. I told him the terms. He nodded, clean and precise, the way he did everything. Can I ask you something? I said, sure. When you first looked at their spreadsheet, when you saw the parental time line, what did you think? He looked at his coffee for a moment. Then he said, I've been doing this for 31 years. I've seen parents hide assets from divorcing spouses. I've seen business partners falsify revenue. I've seen siblings contest wills over furniture. He paused. The parental time thing was new. Did you believe me before you ran the numbers? He looked at me directly. I ran the numbers because that's my job. But yes, I believed you. He set down his mug. The people who make up debts, this specific, always believe they're owed them. That's what makes it so easy to document. They keep records. I thought about that all the way home. They kept records. So did I. Let me tell you where everyone is now. The house on Elm Creek Drive is listed for sale. My parents moved to a rental in Fuquay-Varina 4 months ago. My mother has not contacted me directly. My father sent a text in March. One sentence. I never thought it would come to this. I did not respond. Not because I wanted to wound him, because I genuinely did not know what to say to a sentence that was still, even now, about what he had not expected rather than what he had done. Aunt Vera calls me once a month. She brings food when she visits, sits at my kitchen table, and asks questions about my life with the careful attention of someone making up for lost time. We are figuring it out. Slowly. Slowly is fine. Marcus and I talk every few weeks. It is not seamless. There are things between us that will take longer than a few months to work through. But he shows up. And in my experience, showing up is the beginning of most things that matter. I am still a CPA. I was promoted to senior manager 8 months ago. I have a small side practice now. Individual clients, small business owners, people who need someone to explain what their numbers actually mean. I do not charge hourly for the time I spend explaining. I know what it's like to have a number held over your head by someone who knows you can't read it yet. I bought a condo in downtown Raleigh in January. 2 bedrooms, a kitchen with actual counter space, a window in the living room that catches the afternoon light in a way I did not know I needed until I had it. I bought a plant for the windowsill, small, green, $6 from the nursery on Person Street. It is, against all odds, thriving. On my desk at work, I keep 2 things. David Stein's business card, because I believe in keeping the numbers of people who tell you the truth, and a copy of my grandfather's will. Not the court-filed copy. The original, which the clerk's office allowed me to have reproduced. My grandfather's handwriting is in the margins of the last page, a note to his attorney, small and deliberate. Make sure the children are protected. He meant it. It just took a forensic accountant and a quiet title action to make it stick. Here is what I want to say to you directly, not as a CPA, not as someone who won a settlement, as the person who sat at her parents' kitchen table at 29 years old looking at a number they had invented, $230,400, and felt for one long terrible moment like it might actually be real. Numbers are not neutral. Numbers are a language, and like any language, they can be used to tell the truth or to tell a story that serves the person speaking. People who want to control, you will use numbers. They will make the debt sound precise, because precision sounds like authority. They will make the obligation sound historical, because history is hard to argue with. They will make it sound like care, because money dressed up as sacrifice is the hardest thing to refuse. But here is what I know. A number without a receipt is an opinion. An opinion backed by a spreadsheet is still an opinion. And an opinion from someone who has spent years making you feel small is not a debt. It is a trap disguised as arithmetic. If someone in your life is holding a number over your head, a dollar amount, a tally of sacrifices, a ledger of everything they claim you owe, I want you to hear this. Ask for the documentation. Not because you're being difficult, not because you don't love them, but because love doesn't keep a running tab. Love doesn't charge $8 an hour. Love doesn't collect dividends on your life without telling you. The truth has a paper trail. So does the lie. Know the difference. My name is Claire Booker. I'm 31 years old. I own a third of a house I grew up in, a life insurance policy built on my name, and a condo with afternoon light and a thriving $6 plant. I was handed a bill for $230,400. I hired someone who understood numbers better than my parents thought I did. And the truth sorted itself out, the way it always does, once someone finally ran the actual math. Thank you for staying until the very end. If this story hit something real, If you've ever had a number used against you, or felt like you owed a debt you couldn't explain, leave it in the comments. I read every single one. And if you know someone who needs to hear that a fabricated number is not a real debt, please share this with them today. Sometimes people just need one voice to say, "You don't owe that." Hit like, subscribe, and check the link in the description for another story about someone who refused to be someone else's balance sheet. I'll see you in the next one.